Gonna be going live here in a minute. Just sending out the info to everybody, letting them know. Alright, let me wait for some people to get in here, and then I'll be going live. Let's see. Alright, let me just wait. Do about 2 more minutes to wait here. While I wait, I'm just gonna go ahead and put on some CNBC Asia. See if we got any news going on.
Involving public health
And let me remove my camera from being there.
From an uncertainty factor point of view.
Two very important lessons that we learned from 2003 were: one, be prepared, and two, keep calm and carry on. And you can see that the preparedness, you know, when SARS happened in 2003, we weren't prepared. It was a completely new sort of phenomenon. But since that time, if you look at our contact,
we got anybody in here yet?
Harvard said that, you know, our detection and
go ahead
tracing
and
is gold standard.
message me on Twitch if you're in there, or you can message me on the chat rooms I'm in if you're in there.
I'm not sure if you visited. You use your identification card, and you can't get into the ward until you've tapped your card. That is part of contact tracing, to make sure that everybody who goes into hospital, we know who they are.
But when the Darstone level was raised to orange, there was, dare I say it, an element of panic amongst certain sections of Singaporean population. There was hoarding, there was panic buying almost.
So
did the message not get through?
So that's the second part. So the first part I talked about was the be prepared, and I think we are. The second part is keep calm and carry on. And what happened in that case was, I think that during SARS, the protocols for DORSCON, yellow, orange, etc., was not in place yet. This is something that was later.
Yeah, I think I'm gonna get going here. So, first thing I'm gonna do is just talk about what I'm currently holding. I am currently holding Apple. I have $6,372 worth. I am down $115.30. I have $4,661 of Dollar Tree. I am up $60.50. And I'm holding $3,012 of MPC. That's Marathon Petroleum. And I am up $7. So, first of all, and that brings my total to my current market, or current portfolio or account is at $40,169.23. So, first thing I'm going to do is okay, I got some people tuning in here, so just bear with me 1 minute. Let me wait a little bit longer as I got people coming in. All right. Hey, how you doing, Classy? Said you've been looking at SC as the long-term ticker, pretty constant uptrend over the past year. We'll take a look at that here in a minute. Basically, what I'm going to be going over tonight is I'm just going to be going over the trades I'm currently in. Overall, the S&P 500, the E-mini futures is specifically of the S&P 500. And that's going to allow us to see what's going on during the Asian market, what's going on during the European market, or just what's going on overall all night into the morning into our American market opening. So, let's see here. Do I got everybody in? Everybody's listening. Good to go. I'm All right, I'm going to continue. So I got $14,045 currently invested in the market. The rest is cash on hand. Available to trade 26,124.23. Total of 40,169 and 23 cents. So I'm down in Apple once again. I'm up in Dollar Tree, and I'm up in MPC. All right, so first thing we're going to do is we're going to go over to the E-mini or the S&P 500, and as I go over every time I stream live, just about every night, going way back here is where the trend line started, but I'm going to go ahead and zoom out so you can see this is a year chart, and we are looking at a daily candle. So as you could see from last year, this was, I didn't notate this here, that was last year's news, and I started the notations for this year for this stream. But this is called journaling. I recommend everybody create a journal of some sort to keep track of your trades and keep track of the news in the media. It's really going to help you out. This right here was bad trade war news majority, and then good news, bad news, bad news type deal. And then we just started rallying October, November, December, right? Would that be? And then started keeping notes. So first, all it was this bottom and this bottom. So this bottom and this bottom starts your overall trend line. And I start keeping notes. So as we were going up, market information overall that caused this drop of 2 days was negative trade deal news in China. Rallied up after that by hitting that bottom, and then as we continued to rally, we then got that Iran attack on the U.S. forces in Iraq where we retaliated. That info brought us down again to our support line, and within that same day back up, just creating a wick. We then rallied up until we got to this top. Now my prediction today that I made, it was a good feeling that a lot of people in the chat room noticed and sent me some private messages, some publicly, congratulating me on the good call. That's, it's a good feeling to do it. It's also a good feeling to have it recognized. So, thanks. That was cool. But basically what we did is we came up and we hit all-time market highs, and then that day, all-time market high with a pullback, and then it looks like another all-time high, another all-time high, another all-time high. And then right here, there started being market hesitation. This was the first coronavirus news, dropping us 2 days, bringing us past or down below our support line, but then buyers kicked in noticing it. I'm not the only one that notices this stuff. It's pretty obvious that we got off of this one a trend, right? And this is what I'm getting to of what happened today. This is today's candle. This is tomorrow's candle. We're in the futures market. So tomorrow's candle starts. And what happens, I'm jumping ahead here, but what happens every day is we're able to see at night in the futures market that what's called the gap up or gap down. So when the market opens at 9:30, if the market, let's say, drops down to here, let's say drops lower, whatever, it drops lower to a location, then when the market starts that day, if it starts down low and starts rallying up, it'll be a gap down to a green to a rally. Or let's say if it gaps up, same scenario. So, but let's go back here. So we went up, and then there's some sort of market hesitation at this all-time high, then the coronavirus hits. That brings us our breath, you can say, in the market. The market needs to breathe. The market needs to have sell-offs, and the market will use news after it rallies for a sell-off. That's how the market works. That's how emotions work. Then we buy back in. Now we're juggling. We're riding this line here. Okay, this happens. Just for an example, let's go ahead and let's one I can just off the top of my head think of. Oh, is it Dollar Tree just started rallying up. What about Walmart? I think Walmart's one that I've been watching. Is it Walmart? Yeah, WMT, Walmart. All right, so I think, there you go. See that? So let's zoom out. Same scenario. Walmart's looking pretty good. It actually gapped up, and now it's bouncing. It looks like it's bouncing back up off the line again. So Walmart's pretty strong compared to the overall market hesitation in coronavirus. So I'd say we are looking at, now here's 5 years. You see this? This is Walmart overall. We're going to zoom in to 3 years. Okay, so you got the bottom, you got the bottom, you got the bottom, creating a support. You're up, you're hitting a resistance, you're dropping down. That's your support. Okay, it's loving this zone here, as you can see. And this would be considered the low, buying in. Now, if we obviously break this zone and start dropping more, then you want to stay away from it. But this is the same scenario I'm talking about here. Okay, so we're zooming into a year, 1 day candle, and this is it. So this is looking like a good stock to watch and trade. Okay, especially once you start getting up here towards this dividend. People like to buy in before the next dividend so they can make that amount of money for holding X amount of shares. 1 share, you get 54 cents. Plus, let's say you have 100 shares, you get 54 cents times 100. If you sell the day, if you buy the day before this X dividend and sell the day of the X dividend, you get that money. So you see, usually you'll see, you don't really see it too much here, but usually you'll see a buy-in and then a sell-off. You kind of see it within that, but really not so much because, yeah, you saw the sell-off right here that day. But anyway, so I'm going to go back to the ES, and this was my call. So the coronavirus, then we had this, I put a text here, but basically it was saying that Amazon's earning report caused this. I traded Amazon that day and got that gap up. But then we had the coronavirus drop, and we had the Trump impeachment going on there too, which I added because I believe that brought in a lot of sellers. So then we rallied up, and we met this all-time high again back here, and then we started creating some hesitation around it, and then finally we broke past it. Well, since we broke past this zone, we started getting this here, just like this. You see how it goes up, and then you just see this hesitation here in the market. The market stops growing, starts rising, stops rising. Same scenario here. So I created this circle here, just like that. Just put it there, drew it out, and then this one here. And before this day, today, I called that today, if we get any kind of news, it's going to cause it to move. Now, if we got good news saying this coronavirus all blew over, everybody's healed, good to go, we could have done a little rally, I'm thinking. Of course, we weren't going to get that news overall. I was bearish, and what happened? It was around lunchtime, I want to say. It was some news from China just about what's going on with the coronavirus. You know, obviously it still doesn't sound too good. We know it's going to affect the market in the long run. Not too bad, but it will affect it, causing the market to breathe again. And today at around, we're going to zoom into a daily chart and look if I'm correct here, but I want to say it was around lunchtime. We just had this quick sell-off. So, all right. So this is it right here. As you can see, it started at 10:50, and by 11:30 it hit the bottom. And look where my line is. That's my line right there. You see that? Right here, it hits it. All right. So that right there was the buying opportunity. If anybody caught right at around 12 o'clock, and bought into some blue chip stocks, let's go over to the heat map. This is the S&P 500. Now, as you can see, information and technology, not doing so well. Communication services, not doing so well. You get over here in the consumer, you get over here to utilities, you get over here to energy, you start seeing some green up in here. Now, real estate is doing good. Usually when the market overall over here in information and technology drops, you can usually get some trades over here in real estate. It's kind of like the dollar and gold or something like that. Sometimes, some years, not so much, but this year I've been seeing it. I watch the heat map every day, and I can start kind of building ideas off of it. You use your heat map as well as your chart here, and it'll help you out. Okay, now we can see already going into tomorrow that there's still a sell-off tonight. So let's zoom in. Let's just go right into the fast-paced Roku chart. Okay, this is not time-based. Anytime the market moves up 25 cents or move down 25 cents, you will see a new brick form. Hence the Japanese word Roku. Or what is it? Renko, right? Not Roku. Roku's the TV stock I keep trading. Renko. So there's not much volume. Now you can go into a tick chart. You can look at 512 ticks per trade, 233 ticks per trade, 133 ticks. So basically, let's go to 133. Every time there's 133 trades in the market, a new candle will form. Okay, so that's a way to watch volume without the time. So if just a bunch of traders come in all of a sudden tonight, you'll see just this quick move in this longer gap in time, like 1923 to 1924 is spaced more because volume came in. Now 1924, which is, by the way, 724 to 725, within that minute there was less volume. If the minutes are spaced longer, more volume kicks in because there's more trades going on, creating more candles. Now, what I'm going to do real quick is I'm going to do a little sidebar from what I'm talking about, and I'm going to answer some questions for somebody. Today I had a message to me, and let's see, what was your question, brother? Let me read over it again. You're asking me about the level 2, the depth of the market. So when it comes to the level 2, basically when you're watching candles, and let's see here, I'm gonna go back to my home screen. I'm going to click back over here. Now I'm going to just do a little bit of explanation. Let's see. Let's do this. All right, so this is pretty much how it works. When you're looking at candle charts and you're looking at volume, you're seeing like a pictorial image and you're watching that. Now the level 2 or the depth of the market is where you're actually seeing the trades coming in. If people are trading large amounts, as in like big bag holders, where let's say they're buying 20 lots or like 5,000 or 20,000 shares, and let's say people are buying 100,000 or 2 million worth or something, you can see all that stuff. Now there's several ways to watch your level 2 or your depth of the market. Some people like to watch it where they actually see order flow. You actually see every order that flows through the market. Some people watch the level 2 or the depth of the market where you can see as the orders come in, the market, it goes into the market makers, and the market makers actually, it goes through different avenues, I guess you could say, like the CME and I'd have to dig into it to name all of them, but basically people can trade through different avenues when you get more in advanced trading. Now when you trade on what I trade on, I'm not scalping or doing algorithmic trading or anything like that, so I don't need to get in to where my trade has to be within a specific cent of a level. And to get out really quick, I don't do single cent scalping or anything like that. It's just not as important to me. But I do use the level 2. I do use the depth of the market, and I'm going to explain the way I use it. And it's very easy to understand. Now, in order to use the level 2 depth of the market, you have to make sure, if you use Thinkorswim like I use, you got to make sure you're signed up for it. They don't just give it to you. All right, so here it is. We're going to go into my charting, and I'm going to show you over here on the side view here. You see Active Trader? You click that tab. If you don't have the Active Trader tab on Thinkorswim, then you're not set up for level 2 depth of the market. All you got to do is go to the website for TD Ameritrade, and you got to go to the subscription place, and you got to sign up for it, and that's it. Then they put it on here for you. It's as simple as that. You may even be able to call them in. I know back in the day you're able to call them in. I know you can still do that. So call them in and tell them you want to do it. They'll probably just walk you through how to do it on the website, though. All right, so what are we seeing here? We are seeing above and below the market price. So currently the market on the ES. Now, the reason I'm showing you on here is because even though it's at night, the market is very liquid compared to any other market. Of course, Forex and everything else is, but I'm just talking for the S&P 500. If I go to Tesla right now and look at Tesla, you're not going to see, okay, so we got, look, six waiting in line right here, 6 contracts, 6 people waiting to buy or sell, activity, however you want to view this. But look at this. Do you see it anywhere else? It's because nobody's in the market because it's closed, okay? That's just locked in there due to some form. So let's go back to the ES. Now this is how you trade this. This is how you use it. It can help you scalping, it can help you intraday trading, and it can help you as well getting into a swing trade at a specific level that you want. All right, so right now we're going to go into just a minute chart. Keep it simple. Each candle represents 1 minute. I'll even throw up some studies because a lot of newer traders like to use studies. All right, so this is my volume, obviously. This is an RSI, and this is a modified moving average convergence divergence. So the relative strength index, people that don't know it, when it's down here under the green, you can change these levels, but if it's down below the 30, some people play a 40. If it gets down below your zone here, where I got it turning green, it's telling you, hey, it's a time to buy. And that's because it's telling you the market is oversold. If it gets up here above the red, like you see right here, and I'm just going through RSI real quick, it's telling you it's overbought. Does it mean it's always overbought or always oversold? No. It's just an indicator. All right. Is the moving average convergence always telling you what I'm about to tell you? No, it's just an indicator. I don't use them. I like to go off of candles. I used to use them. I don't need them anymore. There's reasons behind that, but everybody trades different, so I'm not saying my way is the best way. Now this moving average convergence divergence looks different than a lot of people were. They're used to like a golden cross, but basically this is a road. The dotted line is the middle of the road. This is the outside of the road right here. You're the dotted man. If you're in the road, don't trade. You could get hit by a car. If you're outside of the road, it should be a good time to trade, right? Was it accurate here? No, because we are oversold. We are out of the line, but we are already oversold. Now, if a sell-off continued, this would keep telling us we're oversold, but this would stay out of that line and keep dropping. If the road opens, it's because the fluidity of the market is continuing to move in that direction in a more volume. Okay, so as volume decreases and it slows down and it stays steady, this road closes, and then as it starts moving again, the road opens up. But if it moves very slowly going up, that road would stay closed as it goes up, kind of like you're seeing right here. All right, so that's that. Now I'm going to get back out of this and I'm going to get more into the depth of the market, the level 2. All right, and we'll go with a different type of study here. Support resistance. This draws out lines, but what you're seeing, and you want to play all different ways. Let's say, okay, I'm seeing this zone right here, this top here. Is it going to break this zone again? Could we get a breakout out of here? Well, we're going to use the level 2 depth of the market to help us understand. Do you see 100 up here? Do you see a 500? Do you see 200s and 300s up here? No. If we started seeing a bunch of higher numbers form up here, while there's lower numbers down overall here, the market tends to move towards where there's more buyers and sellers waiting. Okay? So, if during the day you're trading the market and you got within the hundreds, 200s, and maybe a few 300s within here, and you got the same here, but next thing you know, you start seeing 500s and 700s and 1,000. Oh, you got 1,000. It flicks up here every now and then, and you like it just did. It flicks up here every now and then, and you see higher numbers up here. Well, you got a breakout zone looking here, right? You got a downtrend, but it just left that downtrend. You got this top here. Let's zoom out a little bit and look. And here we go. Now we're starting to break past, right? Right now, the level 2 depth of the market didn't so far tell us that. But if you use this, it helps you see it. Now, also, I only make trades off of my level 2 depth of the market. I never use buttons. I never use hotkeys. I only trade strictly off of this. And the reason behind that is because I come from the E-mini futures trading design market. That's how I was taught to trade. So I trade on this platform right here. Now, this is how I do it. Okay, I could say I want to buy 3 contracts, and right here, if I click it, I will put an order, stop order in right here, and then if the market moves up to it, I will buy in. If it continues to rally, I'll make money. If it drops, I'll be losing money, right? If I place my order over on this side and the market moves down to it, it would be a order to when it reaches here. Now I could, if I did a limit order up here, it would buy it down here. If I do a stop order up here, it waits till it gets up here and it buys it and continues to go whatever direction. Over here on the seller side, if I do a sell stop, it will wait till it gets there. But if I did a limit sell, it would just go ahead and buy it in at the best price, like a market. Okay, that's the difference between a stop and a limit order. You can also place, let's say up here, a stop limit order. What that means is, let's say the market just jumps, skyrockets. If I had a stop rate in here at 65.75, but the market spiked so quick and I had a stop limit, I could do a stop at 65.75 that triggers my buy, with up here at 68 a limit. So if it spikes up here but so fast that it gets up to this spot real quick, instead of just running past my order and not taking it, it'll jump me in at this spread, this location here. And that works really good with high float trades, penny stock traders and stuff like that. I'm getting really advanced into how to really get into this, but you can do bracket orders too. So let's say here's a target with a bracket, right? So as you can see, if I placed an order right here, I would be buying 3 contracts. When it hits that zone, if it ticks down 1, 2, 3, and a 4th, it'll hit my stop loss and sell. If it rallies up 1, 2, 3, 4, it'll do the same. So I got a bracket of a 4 profit and 3 stop loss. You see that? So 1, 2, 3, 4. All right, now what I can do is I can come in here and I can change that around. Now 4 ticks is a point in the E-mini futures. All right, $1 is a point, 1/4 is a tick. And in the E-mini futures, you make $12.50 per tick. All right, and that's per 1 contract. If I trade 2 contracts, then obviously I'd be making what? $25 per tick. If I trade 4 contracts, I'll be making $50 per tick. So you can literally put this trade in. If let's say I put this trade in right here on the seller side and it dropped back down to 65.75 and I did 4 contracts, how much money would that be? You should be able to easily do the math, right? So if I did 4 contracts right here and it ran all the way down, each tick I'd be making $50. All right, so I'd make $200 off of that simple trade right there. And that's how you would use the depth of the market. And then you can also change your brackets all around. You could do, let's say, you can do a bracket order, but then you can make your stop loss a trail stop. You could do a trail stop with no limit. And so if you did that, So let's say you put an order in up here, it hits your order at 65.50 and it continues to run. You can have no take profit to where it can just run forever, and you can have a trail stop follow behind you, maybe 4 points, something like that, if you're going in for like a swing on the futures market. Now if you put a stop loss in and volatility hits and it spikes all around as it's moving up, it could stomp you out. But that's the level 2 depth of the market. I hope that helped. I don't really see you responding to me in the text saying that you're watching this and that you heard that, but if you missed it, hopefully you get back on here and that'll help you out. I'm going to go over to Classy and answer your question on looking at SC as a long, well, not a question, you're just making a statement. Let me go ahead and see. Were you talking, I've been looking at SC as a long-term ticker. What are you talking about? Get rid of the study. Let me go to 3 years on this. I mean, with the rally that I'm seeing on this guy right now, let me go to a year. Yeah, so I mean, from a swing trader's point of view, let me zoom in just a little bit. Let's go to 1 hour. Yeah, I mean, there's nothing here for my technical analysis. Go back to the ES. See where we're at right now. Alright, so now let's go into my flex grid. Let's take a look at how Intel. So Intel it broke past, but it didn't do nothing, and now really this kind of, it's not really much to go off of with Intel anymore, so I'm gonna keep it on my watch list, but not too impressed by Intel right now. It is forming somewhat of a wedge. If it continues to spiral a little bit tighter, I would say it's looking for a breakout, but if it kind of jumps past and a little sketchy, just ignore it. Nike, let's look at Nike up close. NKE. So Nike's riding the line. Let's go back 3 years. Okay. Now, what I would do here is I'd actually now start looking for a little bit of a wedge type pattern going on in here, starting to coil just a little bit. It's kind of a coil right here. You see it? Coiling up. Nice drop, coiling up, staying on this zone here. Looking for a breakout in Nike, why not? I like it. Let's go back. So we got that line added up there. AutoZone. Alright, AutoZone. I don't know if it got halted this morning, but I jumped right on there to take a look at it. And like the first 10 minutes of the day, I think it just sat there. I don't know. So today was a good day for AutoZone, and it's starting to get away from the zone here. Now let's see what else I got drawn up. Let's zoom out to 3 year. Alright, so that right here is what we're riding. 1, 2, a little bit of strength, not keep us away here. Now we got this bringing us here in between this gap. And then we got this and this. Let's see. So you do kind of got these little zones here that you really broke past, but then strength kicked back in because of this. The only thing that I really think is keeping people away from AutoZone is the price. It's up there, you know, $1,000, past $1,000. Ooh, for AutoZone, you know, Amazon and companies like that, it makes sense. I don't get too much into like the analyticals and news. Look at that. Why Amazon can't keep up with AutoZone. How long's that gonna keep going? I don't know. It would probably be a good article to read or watch. Something to watch there. It's CNBC. So that's AutoZone. Definitely worth keeping on my watch list. RH got that little breakout there. Not really worth covering. Dollar Tree. So I'm in Dollar Tree. We can go over Dollar Tree, DLTR. Alright, so Dollar Tree, I'm in it. In it to win it. That's this 5 year chart right here. Let's zoom out. Let's look at a 10-year. That's 10 years. Look at that. Let's zoom out. Let's go to 20-year. That's 20-year. Well, let's keep it as a, okay, 10 years. So here's 10 years. See that bottom? See that bottom? That's my bold line. Now see this bottom, and this bottom? That's my light line. Now it's our skinny line. It's obviously riding that. You know, it broke past it a little bit. You got this zone right here below it. That would be a good one to watch if it dropped down to that. But that's a good hold to break past it. Immediately buyers kick in, a drop after another drop, buyers kick back in, a little bit of hesitation, another little drop, and boom, finally we're back past it. It wouldn't surprise me if we retest it and then rally, but this is what we're really waiting for, is this earnings report, okay? If you have any reason to believe the earnings report on Dollar Tree is bad, maybe back away. Because of all the overall good earnings reports that we got coming in, Dollar Tree's going to more than likely have buyers keep buying in before we get into this zone. We'll see. I feel like I'm in at a good zone here. So I'm confident in Dollar Tree. Let's see any recent news. We got 219. So yesterday, press release, Dollar Tree Incorporated to host fourth quarter earnings conference call. So they're starting to bring in the news about their conference call coming up. Then we got some videos you could watch here from CNBC. So that's pretty cool. And basically, I bet you what they're talking about here is, a lot of rallying going on, but then we got some still sitting in what you would consider bearish because we're still riding the lower line here. Typically in investors, what happens is they go from their investments that are at highs, usually on the MACD and RSI. They like to trade that in the yearly day candles, and then they'll jump into something here, so if you watch Kramer, if you watch Fast Money, you watch CNBC, what majority of traders are watching, stuff like that, you'll hear them talk about the same kind of stuff I'm mentioning. And remember, basically what you're doing here as a swing trader, what I'm talking about doing as a swing trader, you're riding the waves of a investor. And a intraday trader that trades within a day is riding the waves of me, a swing trader. And you want to learn all the different avenues. That way, if you need to switch up your style a little bit because you're noticing what overall the trading in the market's doing, I mentioned earlier, you're going to see a lot more quick profit taking. All right, you're gonna see the good traders start switching up their strategies now, and you got to be able to adapt. You cannot just be a specific one type of trader. You got to always be growing and learning. All right. Let's see, what else do we want to go over here? Let's just look at a few more charts. So we don't want to get into any analyzation, no options trading. I don't want to confuse people. Alibaba, look at Alibaba. Okay, if it wasn't for the market hesitation because of the coronavirus right now, holy cow. If you feel like the coronavirus is going to blow over, it would not be a bad idea. See, check this out. We had a drop past, and immediately it wicked up. I'd be interested to see, I bet you this dropped at around 11 o'clock or 10 to 11-ish. Let's see. We're going to go into the minute. What do you know? There it is. Same time our E-mini futures S&P 500 dropped is the same time this dropped. That right there gives us the knowledge we needed, okay? So what we are seeing is the same thing we saw here today. Okay, see that wick? Baba did it too, okay? If the coronavirus news comes through and it's bad, you get my drift? If the coronavirus comes through the news and it's not too bad, we should continue rallying here. Alibaba is a huge company. it makes Amazon look a little bit smaller. All right, so that's that. If there's anyone that wants me to go over a specific chart, I can do that. Let me see. Let me just go through, read up on what people are saying. Well, it's not too much more I really want to cover tonight. Got a snowstorm coming in tomorrow, so I'm going to get all cozy tonight. But that'll pretty much do it. Let me go ahead back into here. So Apple, let's just go ahead and take a look at Apple real quick before I get off, because I'm in that one. All right. Well, this drop right here, this gap down, was because of Apple announcing that it's more than likely on its next earnings report gonna have lower than its original expectations due to this coronavirus. But right after that news, the market rallied that day, rallied the next day. Today there's a sell-off because of the overall still market hesitation. I feel like I should actually switch my wedge up a little bit, but that's that. And real quick, let's do this before I get off. Let's go into Chartmill, and let's just see what they're seeing, and then that'll do it for the night. So Chartmill, what are you seeing? The SPY, that's the ES, the E-mini that I keep going over, where I chart out all the news. So obviously they see somewhat the same zones I'm seeing. I think they could do a better job of that. Come on now. You would have caught that, guys. Anyways, but they're looking at this breakout zone that we're riding on right now. Okay, H, you see it? Nice little pattern. It looks like it did a false breakout today. We got Alibaba. We just already covered that. We got PFGC. We got, let's see, Facebook. Here's Apple. There's Apple. There's that wedge we were just looking at. All right, now that was posted 22 hours ago. It's currently 7:55. Usually about 8 to 9 they'll start posting some more if you want to jump on a Chartmill for some more ideas for tomorrow. However, you gotta remember the most important thing. What's going on right now tonight, how this is going to open up tomorrow, and I tell you what, if we break this zone and start riding down below again, it would not surprise me if bad coronavirus gets us back down to this level here. And if it does, it's a good opportunity to learn how to short, to make money. If you're stuck in trades and they all go red, you want to hedge your money and you want to make it by doing some shorts. So as these stocks, let's say, drop, I'm able to make money by shorting, and then when the market settles, the knife hits the floor, and then it starts coming back. Now I gain back money on here, and my hedge saved me some money that I could have lost, and now I'm gaining money. Gain money as it drops, gain money as it runs. Okay? Remember this here. This is to be taken serious, okay? This coronavirus, do not brush it off. Consider it in your every trade you go into, and you're going to notice everybody's doing it, okay? We want to ride the waves. We want to ride on the same side of the road that the traffic's driving on, okay? That's how the market works. We all want to work together on this. And obviously everyone's hesitant, and it's all going to be on news. So if you were watching the 1 minute chart and all of a sudden, out of nowhere, volume kicks up during the day. So let's zoom back here. All right, so this was, look at this, okay? See this? Right when it started dropping, right when it started dropping here, you see volume increase. You see red growing and red growing, okay? Now right here, this is a reversed flag pattern, okay? So just like you do it the opposite way when it goes up, right here would have been your little wedge, and you would have put your order in right here, and then boom, okay, you would have got all that. And then what any other trader that's watching my line should have done here, if you didn't catch this, you would have had a buy order waiting here to catch the bounce, okay? And that would have caught you that wick bounce right there. All right, so keep the news on. If you know anybody in China, give them a call, ask them how they're doing. Everybody have a good night. That's it for tonight.